How's our fellow traders? Welcome back to FX Rhapsody. Today we're looking at two pairs again. We are doing analysis on the British pound US dollar and also then the British pound Japanese yen. Before we hit the charts, just go visit my preferred broker link. It's in the description. These guys are brilliant spreads, margins, a book broker. Really, it's a broker that you can really rely on. And yes, go have a look at them. And yeah, you won't be disappointed. So first thing, or the first pair that we're going to look at will be your British pound US dollar. So as you can see is that we had this big push to the downside with a bearish candle that ended the day basically on last week. So again, I think let's just go back to my previous analysis where I did, and for those of you that didn't watch it, just go, I will have it in the description as well, excuse me. So I was pulling this trend line that was going down to the downside, and then also I had a support area that was here at the bottom, and basically, let me just do this. It looks very nice. Okay, so basically, I was saying the price might be breaking out to the upside and then continue on with a bullish movement. But with all my analysis that I do, I also say but be careful with your analysis. Do your analysis, but don't stay biased to your analysis. Just wait and see what market gives you and then react to that. So, and then with that reaction, trade and look for setups with that, because it could be anything with fundamentals, technical analysis, anything that, or any fundamental news, big news that's driving the markets, especially when it comes to currencies. So yeah, we can see that with this formation, this pattern, we can see that the break happened in that candle or in this formation, this big push to the downside. So this formation was broken. So the support area was broken, structure broken, and now we are waiting to see what happens next. Let's go down to the 4 hour and we can explain a little bit more or better. Again, just going back to my previous analysis, if memory serves right, I had a Fibonacci in, and I was saying that, it was from this low to that high. Let's just move the chart a little bit more to the middle, then we can see. So I was talking about that price was hitting this area over here by the 62% area, and it was a nice area to buy. Again, just risk, guys, because I did have a comment in one of my videos saying that price hitting the 100%, or it hit the 100% or surpassed it. It's not all over, guys, because I'm just going to show you something. So let's say you did place a buy over there, because it's swing trading, it is going to be huge. So you would have had a 57 pip stop loss, depending on where your target is, doesn't matter, but your risk would have been 57 pips. Just keep that in mind. Okay, I want to show you something else. So let's say you lost that trade, you did climb into a buy, 57 pips, gone. It is not over and done with, because your risk should be in place. Because as you can see that, price came and let's say it hit your stop loss, but now how do we climb into this trade that was going down to the downside? It is quite easy. You can see that price made a swing high and then it made a swing low. And what happens when price makes a swing high and a swing low? It retraces. So you take your Fibonacci from that high to that low over there. So that's the swing high, swing low, and then again, where do we enter? We enter at the 62%. So let's just highlight that area. What happened over here? Price came up, hit that 62%, and then it started moving down to the downside. So if you would have entered that trade over there, your stop loss would have been 46 pips. But remember that 50 odd pip stop loss that we had there, the previous trade that you lost. Look at this. So now you're sitting with the 250 almost. Let's make it, yeah, it did hit the 250 target. So you would have lost one trade of 54 pips. the very next trade, because now you're reacting to what market is doing. Because you lost a trade, it hit your stop loss over there. It's not all done and dusted. You just wait for the next setup. Next setup appeared, and you can see the price moving down, and you would have hit. Basically, with this 2 trades combined, you would have made a 200 pip profit. So again, guys, react to what the market gives you. Don't just stay biased to your analysis. Do your analysis, or look at this analysis, look at the market, and then again, you know, react to what it gives you. Now on an hourly time frame, what are we looking at? What are we looking at for next week? So here we can see this big movement to the downside. So again, let's just zoom out a little bit. I just want to highlight an area. So this will be the area that it broke. If we had to go back to your 4 hour, okay, so that was the support area that was broken on the daily in the 4 hour, and then an hour, and all the time frames. But you can see that area over there. And then what I would like to see is, for any movement now, you can see this is the low the price is currently forming. Just zoom in a bit, okay. So if we had to see a retracement, so looking that back at your higher time frames, your 4 hour and daily, if you had a push down to the downside, would like to see price going up to that area, you know, retracing back. So we would like to see price moving in this direction. But before that happens, I would like to see, you know, these key areas broken, especially if we are looking at price going retracing back. That area at least needs to be broken. So we're going to look for anything that happens, you know, behind these 2 lines and see. And then whatever happens, we react to it. And then you draw it down even further down to the lower time frames and to get a sweeter entry. Okay, so that is it for this pair. Let's move on to the British pound Japanese yen. Go to the daily time frame. Again, daily time frame. With this pair, I'm not going to go back to my previous analysis. So for those of you that didn't see it, just go watch it again. The link will be in the description. So key area that I'm looking at over here will be this area. So you can see this, you know, with this bullish movement to the upside, all these bearish candles, they are forming structure, basically support and resistance areas in the market. So you can see this area was an area of resistance coming up again, resisted it, supported it, coming up, breaking through it, coming, and now supporting that area again. So you have this key area in the market, and then also you have this high. All right, so that's basically the 2 areas on the daily time frame that we're just gonna, you know, monitor to see what happens with that. And then drilling down to the 4 hour time frame. Okay. So the 4 hour time frame, there's also this movement to the downside, as you can see that movement. So price coming up, you know, forming that higher highs, higher lows, higher highs, higher lows, higher high, and now price is coming back down. You can see this area. For me, this is the area of structure that was broken. You know, price breaking that area, pushing down to the downside. How could you have gotten in this trade? Because just before we hit there, I just wanted to show you this is the key area again. You know, you can see that area. Price respecting this area. This was that candle that we were talking about now, that bearish candle in between the bullish candles. Now this is on a lower time frame. This is what it's doing. So you can see it more clearer, as you can see this area acting as a resistance then turn support. So this is the resistance, you know, the candles forming that resistance, then resistance being broken, turn support, as you can see, then price shooting up, and then coming back down, bouncing off this area, retracing back. Okay, this is also a key area of support, and then breaking down. So how would you have climbed into this trade? You know, a simple little thing: swing high, swing low, retracement. Where do you enter? 62. So let's have a look. Swing high, swing low, okay, swing low, coming up, highlight the area between the 62 and 79%, smack bang in the middle. Okay, price tapping into that area and then dropping down. So again, very nice entry, sell entry with a nice amount of pips that you could have caught. I'm not going to measure it, but you can see that for yourself. Okay, so just stick to your analysis, work the strategy, and the more you do it, the more you'll see it. It's simple. It's nothing difficult. There's nothing to it. It's just, trading made simple. Now, currently what we're seeing is this price forming some sort of a consolidation, in the market. It's bouncing off that support area on the hourly. So what I would like to see is at least, something happening outside of this, let's call it the block. Okay, so I want to see price breaking outside, and then carrying up to the, and then carrying on up, with a bullish movement. Or if this area breaks down here, this support area that we find ourselves in, scrolling down, you can see the support area. So I would like to see price breaking this area, coming back, retesting it, and then just climbing into that sell to sell it down, to the bottom again. So anything outside this box, let's react to it, and then let's see what markets gives us. Guys, that's all from my side. I hope you enjoyed this analysis. Hit that like button, subscribe to my channel, hit that notification bell for any more videos, analysis, and video content coming your way. And just, guys, stay safe, and please don't forget to comment in the comment section. Hope you're having a wonderful, wonderful weekend. Happy trading, guys.